Right, I think we'll start. People can feed in as they finish the drinks and last bit of suntan. So, welcome everybody. Thank you for attending this discussion about Manchester, a global investor's choice, and thank you to Manchester MIPIM for allowing Ryder Levitt Bucknall to host this important debate. I am Russell Bolton, the managing partner of Ryder Levitt Bucknall in Manchester, and I've worked in the property sector for over 30 years, mainly in the northwest of the UK. We have a fabulous panel lineup, and I'll introduce you to them now. So I'm delighted to welcome Anne Bentley. Anne's the global chair of Ryder Levitt Bucknall, and Anne is a member of the UK Government Construction Leadership Council. Anne's a chartered civil engineer and chartered surveyor and holds an MBA. She is also a visiting professor of business management, project management and cost management at 2 UK universities. And Anne has played a key role over a number of years in the development of Ryder Levitt Bucknall as a truly global practice, and has been a member of the global board since 2012, of which she is now chair. We've got Graham Bates of the Live Group. Graham is a founder and CEO of the Live Group. He's a specialist advisor and operator within the build-to-rent residential sector. Live is increasingly recognised in the region as having the best-in-class model for operating large-scale PRS buildings. His clients include M&G Real Estate, who are funding schemes in Manchester, including the Mulberry and Model Living projects. In the middle, we have David Lawrence. He's the Development Director of AIG Europe. David has worked with AIG Real Estate Europe for over 15 years and has worked across the whole of Europe, including Russia, but more recently in the UK, including Manchester. AIG Investments specialise in developing and funding projects in commercial, logistics and residential sectors, and since 2015, AIG have invested several hundred millions of pounds on new developments in the UK, 4 schemes in the northwest. And at the end of the panel there, with a severely damaged foot from a skiing accident, is Alex Russell, the Managing Director of the Property Alliance Group, who are a market-leading development, investment and asset management company. They have circa £250 million of an investment portfolio. Prior to joining Alliance in 2014, Alex was a director and head of CBRE Manchester's commercial office team, and had secured several of the Manchester's largest letting deals. He's the principal contact with their JV partner, Ares, leading the rejuvenation of Piccadilly Place, a landmark city centre scheme. So the format of this discussion is that Anne Bentley will provide a short presentation, and then each of the panellists will comment on their view of the current state and prospects for the investment market into Manchester, and then we'll open up for questions to the audience. So I'm now going to hand over to Anne Bentley to give your presentation. Okay.
Thank you. So, hi. Well, first of all, thank you for inviting me to speak to you. Just make sure my slides work. Yep, okay, you can see what I can see. The reason that I guess I'm here is I'm talking to you very much from a global perspective, and how that global perspective can then be used to the benefit of the UK and also to Manchester. So my current role within RLB as global chair means that I actually get to see industry from all sorts of different angles, not just from the UK angle. And it's certainly opened my eyes to the different ways that people make decisions around the world. And I sometimes think that in the UK, we think that because we've got a very good market, it means that it's a market that everybody else sees in the same way that we do. But in fact, that's not always true. And even if they do see the market in the same way that we do, they might not be able to access the market in the same way as we do. So I'm really trying to give you a little bit of global perspective and sort of from a Manchester point of view. So the first, there's quite a few charts and photographs and what have you in this presentation. This first chart, I think, is a really interesting one. It's slightly out of date, but it's only a year out of date, and it really, from that perspective, doesn't matter. By far the biggest investor in the UK, by a factor of 2, is the United States of America. And so a lot of people, I think, that if you simply ask the question, who's the biggest investor in the UK, would probably not have said the United States. And because they're a well-established investor and because they've been doing it for a long time, then people often underestimate the value of the American investment. But as you can see, there is massive investment in the UK from all sorts of places around the world. And again, I think sometimes we haven't necessarily quite come to terms with where all of that's coming from. Inevitably, the market that's in the press at the moment are the Chinese investors. You know, suddenly there's sort of the tigers rising, if you like, and all the time we're all aware of schemes that are being funded by Chinese investors. And quite interestingly, so I've been walking around MIPIM now for sort of 24 hours, and it's striking how few Chinese investors are actually here. It's really striking. I mean, it's quite striking how few women are here always, but it's even more striking how few Chinese people are here. And actually, I think this is a real lesson to us all, that yes, an enormous amount of Chinese money is being invested in the UK. RLB's biggest office is in China. We've got big offices in Shanghai and Hong Kong. And the lessons that I think we have learnt from that, and maybe the lessons that all of us can learn from that, is that much of the sort of Chinese business culture, if not all of the Chinese business culture, is on a trust and a referral basis. And so although there might be enormous amounts of Chinese money that is pouring into the UK, our access to that Chinese money needs to be very much channeled through a referral system. You know, it's very, very unlikely that a Chinese investor is simply going to phone you up and say, will you spend my money for me? And I think, therefore, some of our business development and marketing techniques, if that's a particular part of the market that we're trying to attract, will probably have to be different in the future, because the sort of the more European way of marketing isn't necessarily going to be successful. Again, looking at it from a global perspective, so again, we've got a big presence in South Africa. And I think the South African investors are a particularly interesting investor for not just Manchester, if I'm honest, but the whole of Europe. So South Africa is actually a relatively wealthy country in pockets. It's a very poor country in other pockets, but actually, over the last number of years, some of the South African major investors have done very well in South Africa. And a couple of things have happened. In fact, probably 3 things have happened. The first thing that's happened in South Africa is that the level of political certainty has now fallen. It's a much less politically secure country than it was 5 or 10 years ago. The second thing that's happened is they've built a lot in South Africa. And it's not quite built out, but they've certainly the market started to peak. And the third thing that's happened is that the rand has been a very weak currency for a very long time. And now this is a British rather than a European point of view. But of course, with the falling of the pound, suddenly the UK market is a very attractive market to South African investors. And you see there the figure that it says. There's been a 400% increase in South African investment in UK property in the last 18 months. Now, admittedly, that's coming from a relatively low base, but it's still multiplying. And certainly, from Rodelevic Bucknell's point of view, we are seeing significant interest from South African investors. And a lot of them are looking for what I would call sort of not necessarily city centre markets, so markets that have got potential rather than markets that are already very much developed out. Again, I would say that probably in terms of business development, the South African investors are more aligned to a European style than perhaps the Chinese ones are, and are perhaps, you know, are more natural to do business with on a one-to-one basis. Couldn't sort of have this presentation without talking about the US. I mean, the US is the UK's biggest single trading partner, both ways. So we invest more in the US than in any other country, and they invest more in the UK than any other country. And as I said, they might not have a sort of massive presence, but they are a major part of the investment strategy for the UK. And again, I wonder how many of us work at sort of primary level for American investors. And if we're looking for increased investment into Manchester, that's got to be a major target. Again, Australia, people often think of Australia as a long way away and sort of probably doesn't affect as much. There was a really interesting change in legislation in Australia a few years ago. And what this change in legislation meant was that the amount of funds that were put into Australian pension funds virtually doubled overnight. So they changed the pension legislation. The knock-on effect of that was that Australian investment funds had to look for new markets. There simply wasn't enough stuff in Australia for them to actually spend their money on. And so slowly but surely, the Australian investment market has been moving outside of Australia. And again, now the UK is the second biggest place where Australians put their money. So again, a very significant one. And then the final one, most of us, again, particularly in Manchester, will be aware of Middle Eastern investment. And it's, you know, Middle Eastern investment, as actually as some of the other, obviously the North American investment, it is a double-edged sword, because anybody who had already invested in the UK before the pound fell, clearly their investments are worth less if they take their money home. But actually new investment, they can buy more. And so we are seeing new players coming into the marketplace that suddenly see the UK as a very attractive place that perhaps even 18 months ago they hadn't seen. So some really interesting dynamics that I would say that the post-Brexit landscape has given us. Not all negative. Mainly, it has to be said, from an investment point of view because of the fall of the value of the pound. But nonetheless, that doesn't really matter if you're the person that's looking to actually benefit from the investment. So, why would Manchester and, you know, the whole of the UK really be attractive to these global investors that clearly have funds and clearly want to invest? Well, lots of things. One of the great things about the North, and I would say this as an ex-graduate from Manchester University, but first of all, a lot of people live here and a lot of talented people live here. And at the moment, one of the issues for Manchester is that Manchester, and in fact the whole of the north of England, actually has a brain drain. So what we actually managed to do is we managed to educate people really well, but then we actually allow them to sort of slip down south, if you like. Now, that's an issue that's easy to stop. Because as jobs and higher paid jobs get created in Manchester, as Manchester becomes a centre for investment, then actually the people can stay. It's much more difficult to attract people in than to keep people. So actually the quality of the people and the quality of the education is something that overseas investors will look at and go, yeah, big tick, Manchester scores really highly. Next thing, location. And, you know, that's a sort of I mean, you all know this, you all live there. This is a population map of Britain, and clearly you know the figures better than I do. Within an hour's drive, assuming that you can drive anywhere along the M6, or that's a separate issue. Within an hour's drive in good traffic conditions, 12 million customers. Within 2 hours' drive, and 2 hours is an interesting thing because from a UK perspective, 2 hours sounds quite a long way. It's sort of like 2 hours. But actually, from a North American perspective or from a Chinese perspective, I mean, you can't get from central Shanghai to outer Shanghai in 2 hours. So actually, from a global perspective, 2 hours is actually quite a normal sort of customer base to be looking at. From a 2-hour perspective, from Manchester, you can actually touch 24 million customers. That's a hell of a customer base. So again, we've got the talent, we've got the customer base. So 2 big ticks for overseas investors. The next one, now, this is even worse on screen than it is on here, so I'll explain. This is a good graph. This is a graph where being below the line is actually good. And what this graph basically says is, along the bottom axis is net pay, and the vertical axis is cost of housing. And essentially, where the big arrow is Manchester. And what this says is Manchester actually has high levels of salary compared to the price of property. It's all relative, obviously. What it means is property is relatively cheap, but they're not the lowest salaries in the country. In fact, they're relatively high salaries. That's the horizontal axis. And so this actually means it's also an attractive place to live because people can actually afford to buy or rent housing, which in other parts of the UK they simply couldn't afford to do. So you can see that this picture is growing, and actually things are coming together to make Manchester a particularly attractive place for investors. And I think this, sorry, I thought there was another slide, but anyway, I think that this has been recognised really both within the UK and outside of the UK, that maybe one of the very strong things that is going for Manchester is the political momentum. Now, again, I would say that this is a post-Brexit issue. As Russell said, I sit on a government committee, and if I'm absolutely honest, I'm not sure that talk of sort of regional devolution and what sort of the masses of people outside of London really wanted was that high on the political agenda before the 23rd of June. In fact, I would go so far as to say it probably wasn't on the political agenda at all. And I think that's one of the reasons why the UK citizens voted to leave the EU, because it wasn't on the political agenda. The agenda has changed massively. It's palpable when you sort of speak to politicians in Whitehall that it has changed. And there's this sudden recognition that actually most of the people in Britain don't live in London, and that there needs to be a much greater emphasis on moving money away from London, or maybe not moving it away, but equally moving money into other parts of the UK. And I have to say, I mean, I actually live in Birmingham. I spend a lot of my working life in London. And I have to say, I think that the political momentum that the Northern Powerhouse has managed to create is actually quite considerable compared to the rest of the UK. So again, another tick, because there appears to be a political will. Other things that are fairly obvious, great transport links. I mean, Manchester Airport is actually, outside of London, the biggest airport in the UK, and with flights to pretty much everywhere in the world. Again, if you're an overseas investor, that is massively important. You don't want to change planes. You want to be able to fly from A to B. So a massively important thing. And certainly I would see that expansion of the airport and expansion of the countries that the airport flies to as a very, very important part of Manchester's development going forward. And the other thing that maybe guys, or you know, those of you who live in Manchester or work in Manchester or are very familiar with Manchester, you probably don't think that much about. But again, when I'm travelling globally, inevitably, even though I don't know much about it, over the course of a meeting, people always start talking about football. It might be a little way into it, it might be a long way into it, but it always happens. And I will pretty much guarantee you that if there are any places in the UK that you can go to the most, you know, sort of distant place in China, and they will have still heard of Manchester. And it is almost primarily because of the football teams. And quite frankly, don't knock it. I mean, if that's your USP as a city, don't knock it. And it doesn't really matter which one you support or if you support neither. But Manchester has got more than that. It hasn't just got football teams. It's got a very substantial heritage as well. It's got an industrial heritage. It's got a cultural heritage. And it has a pride in its history, which is also a very strong factor for overseas investors. They don't want to come to somewhere that's sort of downtrodden and they're going to have to make a big effort for. They want to come to somewhere that's got a history of performance. So, and yeah, you know, you're all aware of Manchester's other cultural things. I think that the Media City investment was a really confident investment, actually, in Manchester, and to sort of, again, demonstrate that things can be done outside of London and things can be done really well outside of London. And that in itself has had a significant impact on people's view of the city. Again, other factors, and you can see we're getting a long list of ticks. There's plenty of land. And this is really one of the problems that the south of England has. There's very little land down there. I mean, the density now, the sort of scheme densities that we're looking at residential projects in the sort of greater London area are, I think, almost unlivable, if I'm honest. And I think it may well be that we're now building the sort of, you know, the problems of the future in London. That isn't true in the north of England. We might need to up the densities a little, but there's still plenty of land. It might be in terrible condition, and there might be needs, you know, a lot of money spent on it, but there is land availability. So, you know, if you actually want investors to come here, there has to be a combination of factors. It can't just be that it's an attractive place with lots of nice people who are well educated, etc., etc. There's actually got to be something for them to invest in, otherwise they're not going to come anyway. And clearly, I think that at the moment, all the factors are pointing in the right direction. So I got this from, I've seen different figures bandied around actually, but from Manchester City's sort of residential projections, plan to build 227,000 new homes. That is a colossal number of properties. There's an undersupply at the moment, so it is actually still a high-yield market, and I know some of my colleagues will speak about that more. Other things that are particularly going for the UK, though, is that borrowing is still cheap. I mean, borrowing's still really cheap in the UK. And because of the currency drop, of course, overseas currency goes considerably further. And again, all of these factors come together to create a great investment environment for somebody who's not based in the UK. Other things, and these are now UK things mainly rather than probably Manchester things, but we're politically stable. Even, you know, something as sort of monumental as the EU referendum actually hasn't caused much of a political blip. Not really, not for the average man and woman in the street going along their normal daily life. Again, and talking to my overseas colleagues, one of the things that people really, really like about Britain is that we have transparent accounting systems. You know, everybody's subject to audit. We're viewed as being a fair and honest country, and that actually makes investment here very, very attractive. And of course, those things together, so the political stability, the transparency, and the fact that there's undersupply, lead to long-term income streams. And of course, that's, again, if we're particularly looking at Far Eastern investors, that's what they're interested in. They're not looking at 2, 3, 4-year returns. They're looking at 5, 10, 15, even 30 or 40-year returns. So, in summary, for Manchester, I believe that the fundamentals are in place for real estate investment. You know, development is now at its highest level since the recession, and actually I think the trajectory is on the way up. And so, you know, I think it's a great time to be building, to be working in Manchester, because the opportunities are out there and the interest is out there. It's bringing the two together that is now the challenge for all of us. So, thank you, Russell.
Right, we're just going to make some alterations now that Anne's presentation's over. We're going to bring some chairs on the table, put the panel, and then ask them 1 or 2 questions. But before we open it up for questions, I'd just like to get the views of the remaining panellists before we start. So, it's good. So, yeah. Okay, so we'll start with Graham. Do you want to give your
Yeah, good afternoon. You know, I come at this from a perspective of the residential sector, and in particular the build-to-rent market. And you know, at Live Group, we're working extensively with global investors. I would just like to pick up a quick correction from the beginning, which will also be a segue into talking globally, which is that our client M&G Real Estate is actually forward funding a scheme in Manchester on Port Street, but is not funding Moda Living. And that is the segue really, because you know, in Manchester, you know, Moda Living have the Angel Gardens scheme at Noma. They in many ways were a developer who, you know, has led the way in terms of build to rent in the market, and of course their funding is coming from Middle Eastern investments. So you know, you have a very significant you know, £100 million investment in Manchester just in one, you know, residential scheme there. You know, we've also worked extensively over the last 3 years with Scarborough Group on Middlewood Locks. You know, potentially one of the largest schemes outside of London, 2,500 homes, as well as commercial and hotel investment. And that will be mixed between for sale product and private rental. You know, again, big Chinese connections there into Scarborough, and in fact, you know, the development's being conducted by Beijing Investment. So, you know, in two of the, you know, biggest residential build-to-rent schemes in Manchester, you know, we've got Middle East and we have China. And, you know, there's absolutely no doubt that, you know, we're seeing this. I mean, this is this is UK-wide, of course, in terms of the global investment, but, you know, Manchester is very largely regarded as being the PRS build-to-rent capital of the UK, you know, outside of London. And, you know, we're working extensively at the moment, particularly with US investors who are extremely keen on getting into this space. And I think we'll probably be among some of the biggest investors going forward.
Thanks. David, you want to come in?
Yeah, my name's David Lawrence. I'm the Development Director for AIG Investments, part of AIG Global Real Estate. We've been working primarily on mainland Europe for the last 15 years, and 2 years ago we had a change in strategy and focused on the UK. During that time, I've been away for 20 odd years from the UK, so I've seen, although I'm from London, I've seen a massive shift in many things in the UK, particularly in performance of delivery of contractors, consultants, since the time when I was living in the UK. We're involved in a number of schemes in the north, primarily because of many of the factors that Anne mentioned in her presentation. A lot of those factors, such as land, such as the pricing, makes the northwest, the northern powerhouse, a much more sensible place to put our investment as opposed to the southeast. So a lot of our focus is in the regions of the UK as opposed to the southeast and London.
Thank you. And Alex, who's bravely linked into the presentation today. So, Alex, your comments?
Yeah, just reiterating what Anne said, really. We're, in practice, I'm glad to see that USA is dominant, China and South Africa. So, across all our brands, on the commercial side, Property Alliance Group, our biggest partner is American Money. That's Ares, as we said before, and they're massive investors into Manchester. Only other region really that are touching other than London, and they've got 250 million that they want to continue to invest further into Manchester. They bought Piccadilly Place with them last year. They're speculatively going to spend 4 million on the public realm, improving the access over the bridge. Looking forward to launching that in the next couple of weeks. And then on to China. We've come into the residential market in the last 2 or 3 years, and really what Anne said it before, it's a lot down to trust and relationships. These guys know the research. 2 or 3 years ago, it was a lot about the football. I wouldn't say so much City as much United, but they now know what they're talking about, and they major big time on relationships, trusts, and the reputation that the council has is definitely you know, well researched out there. They know that we've got a robust planning system, and they know if you work closely with the council, you'll get the right schemes, and they're here for the long term. It's long-term investments. They're happy to pay what we're seeing. People have been scared by £500 a square foot, which we're achieving Axis and Oxygen, but they don't see that. See, there's a huge gap between Manchester and London still on residential prices, so it's going to continue to go up for the foreseeable future. And then on the asset management side of the business, APAM, we've got 1.6 billion under management at the moment, and I'd say 75% of that is overseas money. Huge increase in South African, as the stats say there. The guy that we're particularly JV with at the moment, he came over 18 months ago, briefed to invest the money in London. We took him on a road trip, brought him up to London, up to Manchester, sorry, and he was blown away. He'd not been to Manchester for 15 years, and he just said the change has been staggering. So he wanted to invest in Manchester. He's ended up, the first 3 properties he's bought, 2 of them have been in Manchester. So he's categorically wants to keep going. And the main thing on that is it's not just offices. I think the big selling point in Manchester is it's busy on all sectors. So these Chinese guys now have bought a lot of our apartments. They're now saying, can you find me an office building? Can you find me an industrial unit? We just want to commit to Manchester.
Okay, thanks. We did have a couple of questions that we were going to pose, but I think with the presentation and the discussions, you've already answered them. So I'm going to throw questions out to the audience. Does anybody have any questions for the panel? No?
Just speak about investment. We've heard a lot yesterday about investors increasingly looking for longer-term return rather than just a return on the bill. To what extent have you noticed that in your partnerships with investors, especially around Manchester?
Well, I mean, that is certainly relevant from a point of view of the build-to-rent market, because I mean, there are different types of investors clearly that are coming into the space or have different models, but the long-term model absolutely exists. I mean, we're working with a number of global investors who are absolutely looking at 30-year models. So when you're into that length of period of investment, there are factors that are extremely important. The life cycle of your product, the driver for net operating income. So it's not just in real estate terms, it's not just simply the build of the product, but then how the product is going to be operated and value driven from it over the long term, because ultimately all values are driven off net operating incomes in that space. But definitely, I think, a much longer-term view. And in fact, I would say that, I don't know whether you would agree, David, on this, but I would say the global investor has the longer-term view more often than not than UK investors.
We would be certainly a minimum of 10 years at investment, which we run the properties for that period of time.
Yeah, I think on the particularly Chinese, that's where quality comes into it. They're looking for the best-in-class quality. They are looking 10, 15 years. So if they're going to pay top prices for Manchester for a residential unit, or invariably they buy 4 or 5 at a time, they want to know that the quality is going to be there at the end. That's why we're obviously pushing for more high quality residential in the city.
Okay.
We hear a lot about the great things about the Northwest as a destination for global investment. Just rounding out that context, what are the issues that tend to put people off, that tend to keep Manchester as a sort of secondary option? What are the key issues to be avoided?
From my point of view, I think from what my observation, nothing sort of just being new to Manchester now, live there. I think there's been the Northern Powerhouse, as Anne mentioned, there's a political will, and it's got a great branding. But I think if you dig below that, I think it's not very joined up. It should be. There were some interesting panel discussions yesterday about clusters and how they're actually operating. I think the transport links, okay, Manchester to London's very good, but between other places it can be improved. There's some shocking railway compartments I've been in around the country if you haven't by train. So I think that could actually improve, certainly by transport links, and obviously to relieve congestion, which does tend to build up around the Manchester area. I think that is an area for attention from the government and the regions. The transport infrastructure, yeah.
I think the other thing as well is, and this is completely chicken and egg, is the brain drain. So basically what we have is we educate some fabulous people and they generally move south. I mean, that's true of the whole of the UK. And the reason they move south is because that's where the better paid and more interesting jobs are. And if only these people stayed in the north, then they could probably create better paid and more interesting jobs. But you've got this sort of vicious circle. And I do think that part of the drive for investment has to be the creation of very broad employment. It's not employment at all costs. It's not building hundreds of call centres that pay £7.20 an hour. It's actually got to be really at every single level, encouraging people to stay and prosper in the north. And at the moment, the stats are showing us that whilst Manchester's probably doing better than most places, actually there is still a net slide south, if you like. And I think that creation of broad jobs is really important.
But do think that is starting to change
It's,
now.
yeah.
You know, there's a big student retention here, and this is hugely important, you know, for Manchester. And, you know, there are lots of drivers that keep students in, you know, I'm in danger. I talk a lot about residential because I know a lot about it and very little about anything else. You know, in terms of, you know, keeping your students, the students, for example, are now so used to high quality accommodation, so where they're going to live, you know, you've got to be able to retain them in the right environment. But, you know, Manchester is just such a hugely vibrant city, and I think when you get people into it, you know, you would actually notice the difference quite significantly between other, you know, major regional cities, you know, at the moment.
And I think it's got, you know, again, in terms of Manchester itself, building for the millennials or what they want, as opposed to sort of our age bracket coming straight out of university. The kind of facility, a lot of them don't want mortgages, they're happy to rent, but they want really good quality, they want excellent Wi-Fi, and they want amenities, and they're the sort of things that we are having to build in our schemes for that young generation. And I think that's something that, as developers or investors, the more we can have that in Manchester, it will become an attractive place, because you know, trying to rent a place in London is often completely unaffordable for the average graduate.
But another important point which we touched on, Anne, earlier on, was about the need for, you know, for wage growth. You know, we talk a lot in the residential sector, especially in viability analysis about rent growth. You know, to get rent growth, you need people that are earning money and getting good wage growth. So, you know, the whole employment structure is so important.
And the nighttime picture is very important as well. I think we've seen a big change last 2 or 3 years in terms of Manchester becoming a 4 or 5 night a week city. You know, only got to go back 2 or 3 years ago, and it was quiet other than Thursday, Friday, Saturday. I think what Allied London have done down at Spinningfields has transformed that, and you can go down any night of the week now, and it's pretty busy.
Well, actually, it's a quite an important point. You know, if you look at Manchester, you know, 20 years ago, nobody lived in Manchester city centre. I mean, 20 years is no time at all, you know. I mean, and that, you know, you go right across the UK, you have a similar picture with our city centres. You know, we are, you know, now adopting very much, you know, the lifestyle of Europe. But, you know, the big shift now is we've got genuine urbanisation, because, you know, people want to. You know, I was one of the first people that ever lived in Leeds city centre, and people used to say, well, why do you want to live in a city centre? But back then you had to get in your car and drive 20 minutes out of the city centre to buy a bottle of wine. You know, there was no amenity. Now, you know, that everybody wants to live, work and play, you know, in the cities. And you need to look around at, you know, people that are working in the city today. You know, increasing the vast majority live on the doorstep, they don't drive cars, and they put a lot of their money into their accommodation and into their leisure spending.
Good. Thank you.
Yeah.
Any more questions? No, just a quick one from me then. We touched on Brexit. I mean, that's the panel's view. What you feel the impact of Brexit has had on the investment market into the region?
I think it goes back to what we said before on the long-term plans, and it's long-term investment. I've not seen any change really. There was an initial 3 or 4 weeks where people sort of just took time to gather their thoughts, but particularly with the overseas investment, they're not thinking 2-3 years strategy, they're thinking 9, 10, 15 years. So they're not concerned. I think ultimately, especially when we're talking about Manchester, you know, Manchester's performed incredibly well over the last 10 years. Forget we don't know what's going to even happen in the next 2 years yet, but we know in 9 or 10 years, whatever happens, Manchester's still going to be a great place to live, work and...
Yeah, and also that, you know, how the housing agenda is not going to go away. It was here 10 years ago, and it's going to be here for another 10 years until those 227,000 units get built, and that is a hell of a lot per annum to achieve, and that will not go away. So as a foreign investor, the housing issue in the UK will remain.
Yeah.
I think you know, what we saw immediately post-Brexit was a kind of a pause situation, and it depended where in the world you were as an investor. So we were working, for example, with a major Scandinavian fund who had big plans to push into the UK market from a build-to-rent perspective, and immediately put those plans on hold. And in fact, have not changed from that position at all. Are still watching and waiting. However, what we also had was UK funds who went, we're going to use this as an opportunity because there's going to be a little bit of competition taken out of the space. There was a bit of tightening on prices. There was an opportunity to do some slightly better transactions in value terms. And then you have the players from the States, for example, who were thinking, you know, this is a really big opportunity for us. So it was very mixed, but broadly now I would say it has no impact whatsoever. As David said, it's about the fact that, you know, we have an enormous demand for housing in this country, and, you know, and that isn't going away, you know, anytime soon. And most particularly, you know, we've got now a huge drive towards having a generation of renters who need to be supplied.
And Anne, you did some research on
Yeah, I mean, I would say from an actual UK perspective that there is now far more political attention being given to places other than London, and therefore I think that the political will to actually develop all of the regional cities, to be honest, is, I mean, it's tangibly stronger than it was pre the 23rd of June. And we shouldn't underestimate the impact that that will have in terms of policy. And I think we're already seeing that in terms of infrastructure investment. You know, I think that some of the decisions that were made more quickly post 23rd of June than they were being made pre-23rd of June, because suddenly it was recognised we actually needed this important infrastructure. And of course, development to some extent follows infrastructure.
Okay. Any more questions to the audience? Okay, well, I'd like to thank the panellists for coming today. I'd like to thank you for attending as well. And we look forward to the next seminar, which is with Gary Neville in a few minutes' time. Okay, thank you.